Right now, as you are watching this, something is building underneath the surface of this crypto market that the price charts are completely failing to show you. And I am not talking about a rumor. I am not talking about speculation. I am talking about a stack of documented, verifiable, institutional-grade developments that have been quietly assembling themselves over the last 30 days, pointing at 4 specific assets in a way that should have every serious holder sitting up straight. XRP, XLM, HBAR, and QNT. Now let me be clear before we go any further. Nobody can guarantee that any month in crypto is the month for any specific asset. Anyone who tells you otherwise is selling something. What I can do is walk you through exactly what is on the calendar, what has been confirmed in the last few weeks, and why the convergence of these specific catalysts right now creates a setup for these 4 assets that is unlike anything we have seen in this cycle. Let us start with the macro backdrop because context is everything. As of today, the crypto fear and greed index is sitting at 13 out of 100. For 59 consecutive days, XRP has been in a tight consolidation range. Analysts across multiple platforms are flagging that Bollinger Bands on XRP are at their tightest in months, which historically signals a major volatility expansion is imminent. The market is a compressed spring. The question is what releases it? And here is the answer. April has more scheduled catalysts for this specific group of assets than any previous month this year. Not theoretical catalysts. Scheduled. Confirmed. On the calendar. Start with what is happening this month in Washington. The SEC's Clarity Act Roundtable is scheduled for April 16th. That is 10 days away. Senator Cynthia Lummis has confirmed the Senate Banking Committee markup is targeted for the second half of April. Senator Bernie Moreno has said in plain language that if this bill does not clear the Senate floor by May, digital asset legislation will not move again before the November midterm elections make major financial votes politically untouchable. Coinbase's own chief legal officer appeared on Fox Business this week and said a deal on the stablecoin yield provisions is very close. Polymarket currently prices the Clarity Act being signed into law in 2026 at 65%, up from lows of 48% just days ago. Here is why that matters for these 4 assets specifically. The Clarity Act, when it passes, does 3 things simultaneously. It gives institutional allocators who have been sitting on the sidelines defined legal rules to finally deploy capital at scale. It accelerates the entire altcoin ETF pipeline. And it gives the tokenization of traditional assets a legal framework to move from pilot programs into full production. The assets that have already been classified as digital commodities by regulators, XRP and XLM, both received that classification in March of this year, are first in line for that institutional capital rotation. Not last. First. Now let us go through each of the 4 assets individually because each one has its own specific catalyst story happening right now. XRP. The price has consolidated between $1.20 and $1.40 for 59 straight days. That is not weakness. That is compression. The Bollinger squeeze on the daily chart is at a multi-month extreme. Every time XRP has shown this kind of compression in previous cycles, the resolution has been a sharp directional move. Which direction it resolves depends on what the catalyst is. Goldman Sachs revealed a $153.8 million position spread across 4 XRP ETFs in its fourth quarter 2025 filing, larger than the next 29 institutional holders combined. Exchange balances are at 7-year lows, meaning available sell-side supply on open markets is shrinking while institutional custody demand is growing. Ripple launched its unified treasury platform on April 1st, putting XRP and Rlust inside the same dashboard as fiat for Fortune 500 corporate treasury teams managing against $13 trillion in annual payment volume. And the April 16th SEC roundtable makes this the most catalytically dense 4-week window XRP has seen since the SEC lawsuit ended in August of 2025. The setup is not being manufactured by Hopium. It is being built brick by the institutions already inside this asset. XLM. The overlooked one. And I want to spend extra time here because XLM has been so quiet that even holders of the asset are underselling what has just happened. On March 17th, the SEC and CFTC jointly designated XLM as a digital commodity. This is not a minor regulatory footnote. This is the removal of the single biggest legal barrier to institutional participation in Stellar. On that same day, Amundi, which is Europe's largest asset manager overseeing 2.3 trillion euros, launched a $100 million tokenized fund built on the Stellar network. 2 documents, same date. Regulatory clarity and institutional money arriving on the same morning. XLM's real-world asset TVL on the network is now over $1.2 billion. Franklin Templeton's Benji token, their on-chain U.S. government money fund, holds nearly $500 million on Stellar. PayPal chose Stellar for PYUSD because of its scale and settlement speed. Société Générale integrated their euro-backed stablecoin onto Stellar for MiCA compliance. CME launched XLM futures in February of this year. The 12-hour chart on XLM has an inverse head and shoulders pattern currently developing, with the right shoulder in place. The last time XLM cleanly reclaimed both the 20 and 50 period EMAs on March 12, it triggered a 15% rally. The technical setup and the fundamental setup are both pointing in the same direction. XLM is not a sleeping giant waiting to be discovered. It is an infrastructure layer that already has Europe's largest asset manager, PayPal, and a major French bank building on it, trading at extreme fear prices. HBAR. Here is the heterothesis in one sentence. It is a network that already does what most crypto projects are still promising to do, and the price has not caught up yet. BAR's daily active wallets jumped 190% in late 2025, even as the broader market saw a 27% drawdown. Transaction counts now regularly rival or surpass Ethereum's. Over 85% of total HBR supply has already been released, which means the structural unlock pressure that suppressed the price for years is effectively over. The governing council of 31 members, Google, IBM, Boeing, FedEx, Deutsche Telekom, McLaren Racing, Repsol, and more, is not a marketing list. These are organizations that each paid millions in operational commitments to run nodes and participate in governance. McLaren Racing joined as a full voting council member in March of this year, bringing the entire global motorsport audience into Hedera's ecosystem. The AI Agent Lab launched on March 27th, which lets developers build on-chain AI agents with no-code, low-code, or full custom workflows, directly lowering the barrier for the next generation of on-chain AI applications. The Canary Bar ETF has $93 million in net inflows, and HBAR has been identified alongside XRP and XLM by analysts tracking the OMFIF, the network of central banks and sovereign wealth funds collectively overseeing around $43 trillion, as one of the 3 protocols being positioned for the global liquidity infrastructure build-out. The market cap is roughly $4 billion. The infrastructure being built on it is being built by companies worth trillions. QNT. And this one deserves the most attention right now because it has had the least mainstream coverage relative to what just happened. On March 25th, Murex and Quant announced a strategic partnership to embed institutional-grade digital asset capabilities directly into Murex's MX3 platform. If you do not know what Murex is, it is the capital markets software used by the world's largest banks to run their trading desks, risk management systems, and post-trade operations. Murex MX3 is not an experimental fintech tool. It is the operational backbone of institutional capital markets globally. What this partnership means in plain language is that banks and capital markets firms can now issue, settle, and manage tokenized deposits and digital bonds inside the systems they already operate daily, without building parallel infrastructure. They do not need to replace their existing workflow. They just add the on-chain capability on top of it. And the Quant Overledger layer is what connects those systems to multiple blockchains simultaneously, both public and private, through a single integration layer. At the same time, Quant is participating in the Bank of England's Synchronization Lab, testing atomic treasury automation for the UK's future real-time payment system since February of this year. Quant and Japanese firm Dentsu Soken are providing Overledger technology to the Bank of Japan as part of the BIS Project Agora, building national-level digital currency and programmable payment infrastructure compatible with Japan's existing real-time gross settlement system. A consortium of 6 major UK banks, including HSBC, Barclays, and Lloyds, is piloting tokenized sterling deposits on Quant infrastructure right now. And DTCC, which processed $3.7 quadrillion in transactions in 2024, has received SEC approval to begin tokenizing real-world assets from mid-2026, with Quant embedded in the infrastructure chain that makes that possible. QNT has a fixed supply of 14.88 million tokens. Every enterprise client that licenses Overledger locks QNT for 12 months. As usage scales, circulating supply structurally decreases. As of late March, whale wallets holding between 100,000 and 1 million QNT showed net accumulation on the exact day a bullish divergence printed on the daily chart. Technical analysts are watching a clean break above $79 as the trigger for a move toward 95 and then 107. The Bollinger Bands are tightening in a pattern identical to the setup that preceded a 20% surge in February of this year. And unlike many crypto assets where you are betting on future utility, QNT is already inside the operating systems of the banks. The utility is not coming. It is here. Now let us zoom all the way out and address the question in the title directly. Could this be the month for all four of these assets to explode? The honest answer is that no specific month is guaranteed in this market. Anyone who tells you differently is lying to you. But here is what is true. The regulatory catalyst is measurable and scheduled. The April 16th SEC Clarity Act Roundtable is happening. The Senate Banking Committee markup is targeted for late April. The window before May midterm election dynamics close the door is weeks, not months. The technical compression on XRP is at a multi-month extreme. XLM just received dual regulatory and institutional validation on the same day. HBAR just completed its supply unlock cycle and is sitting at extreme fear prices. QNT just got embedded into global capital markets operating infrastructure while simultaneously running central bank pilots in England and Japan. This is not a rumor cycle. This is not a hype cycle. This is an infrastructure cycle. And infrastructure cycles do not produce the kind of overnight price explosion that gets people excited on social media. They produce something more durable and more valuable. They produce floors. New floors that the market never falls back below because the utility creating the demand does not disappear. The setup is real. The catalysts are dated and documented. And the fear and greed index sitting at 13 right now means the majority of retail participants are nowhere near this conversation. That is historically when the best entries exist. Not when everyone is excited. When almost nobody is paying attention. If this breakdown connected dots you needed connected, hit the like button right now. That is how this reaches the people who need to see it before the catalyst hits, not after. Subscribe if you want every major development on these four assets the moment it drops this month, because April 2026 is shaping up to be one of the most catalytically loaded months this market has seen in years. Drop your answer in the comments. Out of XRP, XLM, HBAR, and QNT, which one do you think has the most asymmetric upside this month relative to where it is priced today? I genuinely want to see where this community's conviction sits. And if you know someone holding any of these four who has been questioning their position because the price has not moved yet, send them this video today. Because price lagging fundamentals is not a bug in this market. It is the feature that creates the opportunity. Stay patient. Stay informed. Stay ahead.